Itadakimasu. That's Japanese for let's eat this meal. I'm thankful, essentially, because even though we were red today on the day about 2.89%, we're still thankful because that's an opportunity to eat, baby. What is up, everybody? I'm the Trey. We freaking talk fast and don't skip class / light tabs, baby. I like to reference by saying that I'm not a financial advisor or expert, so take what I say, they great solve. Let's get into the video. So today, my friends and my family, we're going to go over the ticker symbol AMC, giving you the regular update here for the evening. We're going to go over the technical analysis, the Ortex data, short interest, the short sale volume percentage, which I actually find very interesting. There's something that I kind of want to talk about that I think is going to put things into perspective for you about how you can think of short interest on AMC, as well as Stonko Tracker. It shows you the call options are currently in the money, about how many shares are available to borrow, and then give you some parting words. But before we get into this, just know that tomorrow I do have my heart surgery, so I don't know how active I'm going to be. I am going to be doing a live stream in the morning just to give some sort of, just chat with everybody for a couple hours before I go in. But I'm going to go get that surgery done. It's a pretty small one, about a 1 inch incision here on my sternum. They're going to put in that freaking loop monitor, patch me back up, should be out, recovered within a couple days. So pretty simple stuff. Don't worry about it. I'll give you guys an update when it's all said and done. And that's kind of what I've got for you. So let's get into the video, baby. Where's my, holy Toledo. I thought I didn't have my spoon. I was ready just in case that fucking spider decided to come back. So Ortex, another goddamn day where you saw the short interest go up 1.29%, which is filthy. That's a beautiful, beautiful thing to see. We got 98.27 million total current short interest of free float, which is essentially, 19.21% estimated. This is 85% of the exchange reported data. Look up the FINRA fines on any given month. You'll be amazed at the amount of malreporting that takes place from different hedge funds, big firms that fail to report the proper short interest and shorting into the market that they're supposed to, right? I'm going to put this in perspective more with the daily short sale volume percentage, but this, to me, is not the entire picture in terms of short interest. Ortex twice in the last month has actually had to correct the short interest because of the amount of reporting that actually came out, because they're just estimating, right? They're giving you an estimate based on a lot of different algorithms, data, historical trends, blah, 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 right? And what you got right now is 19.21% or interest, short interest, based on 85% of the exchange reported data. So that's what you got cooking up right now in terms of the actual short interest on the stock. It's a beautiful thing to see, right? Put this in perspective. Up 1.29% in short interest, only went down 2.89% on the day. Now think about this, right? If they were to short a total of 4.66 million new shares, right? Let's just take an average cost. We'll take the low ball, right? We'll take this at the absolute low ball. $56 times 4.66 million shares, right? What does that come out to? $260 million of shorting took place on this day alone based on that live update. That's filthy. That's nasty. And they dropped it down 2.89%. That's nothing. And you guys are going to be even more blown away by this. I showed this on my live stream this morning, and you should be floored because we had a green day yesterday, despite the fact that the short sale volume percentage was 54% of the overall market rocket, which means a couple of things, right? It means that the apes stepped in heavy. You had a lot of extreme buying pressure, despite the fact that literally more than half of the volume that came into the stock was short volume. To be up 7% yesterday, despite the fact that 54% of the volume was short, means that people were slapping the ask. They weren't hitting the bid, right? They're not trying to buy for cheaper. They're buying at whatever the market gives them, right? They're driving the price up, even though the shorters were trying to push the price back down. That's beautiful. It shows you the strength, right? You look at this chart, you don't have to know a freaking lick of technical analysis. You can see this chart, man, and just see that this is bullish. It just is, right? You have this huge period of consolidation, huge rip up, and it literally just established a new floor. That floor is stupid strong. I mean, just look at this real quick. To put this in perspective, Fibonacci retracement shows you the strength on any sort of given chart, right? You're hugging right beneath that 23.6% retracement, which is really solid. It means it only gave back 23.6% of the run from $11 to $72. That's monstrous. That's a huge, huge, huge amount of strength. You should be proud of that. Another thing I want to talk about here is this idea of how you can think of short interest, right? So we've got failure to delivers, essentially call options expire. You exercise them if they're in the money, essentially meaning that you just want to buy 100 shares at whatever designated strike price that is that call option, right? They exercise, and the market makers, options market makers, can't deliver on the stock, so they give out an IOU. That can be considered short interest. Naked short selling can be considered short interest. Now, what about this third option, right? What about the third option of people buying stock, and there may not be stock circulating for people to buy? What happens? Market makers have to get things filled, right? That's how the market works. They can't just stop the market. They can't just let things not go. That's the market maker's job. They actually have a supply. Options market makers and market makers both have their own portfolio of stock that they're always hanging on to essentially close the spread between the bid and the ask, essentially how much people are willing to buy for and how much people are willing to sell for. They try and limit that, right? So what happens if people can't actually buy stock? Well, if the market makers don't have supply, the market doesn't have supply, what do they do to keep the market running? They create supply. Because either that or the stock price shoots up exponentially. They can't do that forever, right? They can't do that forever. Eventually, if that is happening, first off, that's a problem. That's not a good thing. That's illegal. That's naked stock, right? But that can also be considered short interest because think about this, right? Think about this. People have been buying and holding the stock, even if it's just 90%. 90% of people that have been buying AMC stock have been literally just buying and holding it for 6 freaking months. Where's it coming from? Where's the supply coming from? Now, I'm not saying that an exact number. Nobody can do that. I'd be absolutely doing you wrong if I tried to even speculate in terms of how many shares are actually existing. But if that does take place, that could be thought of as short interest. Stock that eventually has to be bought back, similar to an IOU from a failure to deliver from an options market maker that can't deliver on the underlying stock. If you don't think that's happening, look at the options market. Look at the absurd amount of failure to delivers that derive from the AMC derivatives market. It's absurd. It's a huge amount. It very, very, very realistically could be happening with the stock, right? Just ponder on that. That's all I want you to think about because that is considered short interest. It's not as simple as what's reported to the actual exchange, right? That's not the whole picture. It's just not. It's a trend, right? It's a trend. As the stock gets harder to borrow, there's less overall supply. The demand goes up, supply goes down. That's where you run into the issues of fraudulence because market makers, options market makers, hedge funds firms, they're all trying to make their best dollar without disrupting the market, even if it means doing things illegally. So think about that. Stock tracker as it sits right now, just going to refresh this to make sure you have the most up-to-date information. 1 million total shares available to borrow, and this actually went up just a hair. So I don't think this necessarily means that shares are returned. It could be two things, right? It could be that some shares are returned, which I find less likely, right? I'd tell you if that's the case, just based on the price action. You would see with the price action, you have a nice bump up for the upside if there were shares that return. But if they were returned, it's not a huge amount. 500,000 shares based on a day where you saw a total of 63 million in volume isn't going to push the price up a whole lot, and it's actually not going to change things. And you saw that it actually had a net increase of short interest. So the second and more realistic possibility is that some lenders just had more stock available to borrow. There's more overall stock available to these lenders to give out to big firms, institutions that want to borrow stock, and that increases the overall supply of borrowed shares into the market for people to try and take a stab at what I call the worst trade of all time. You want to go long on AMC stock? Man, best performing stocks in 2021, Dogecoin, AMC, GameStop. Worst trades of 2021, Dogecoin, AMC. If you're going short, that's just not an intelligent move. So let's look at rocking right now. Call options in the money, about 60,000. You'll have another 41,000 at $60. So that has not changed a whole lot. This drop for the downside just a hair. I want to show you an example of unhedging because it likely did happen at least to a small degree when you dropped underneath 57 bucks right here, right? See this drop, that huge 1 minute candle? This could have been a combination of two things. This could have been some hedge funds who purposely shorted it into a technical breakdown, which is what this was, right? I'm going to show you exactly what I mean. Let me just show you the actual technical setup on this. This was a technical breakdown setup, right? Now there was a couple times essentially where it tested down at this $57 level. It tried it 1 time, 2 times, 3 times, and the 4 test trend works for both the upside and the downside just based on AMC stock's history and the way that the stock runs. It broke for the downside just based on this downside descending level of resistance and that lateral level of support, and it just broke down underneath that. So you probably had a combination of two things. You had a purposeful push on the downside by shorters. You also probably had a little bit of unhedging from market makers, options market makers, who just dumped some stock back into the market based on the fact that those $50 to $57 strikes were no longer in the money. So that's something to think about. That definitely was possible. It could have happened. Does it make a difference? No. If you're holding stock for the long term, you're waiting for this thing to run, you're sitting absolutely fine. The only thing that I advise against right now, just based on the way the stock is trading, this sort of crap, right? This up, down, up, down, up, down, up, down, until it gets a technical breakout, be careful with short-term expiration options. You do what you got to do. It's your own financial responsibility, your own decision, right? But it's a gamble. It is 100% a gamble to play weekly expirations when you're in this sort of trading zone. It just is, right? So be careful. Think about that. This is an investment. There's always risk on the table, but you don't want to gamble, right? You got to be careful with your money. You absolutely do. Now, looking at this on the 1 hour time frame, there's really not much to update you on. I mean, there's really not. You're sitting in a solid pennant formation. I stand by exactly what I've said here in the past, and I'll say it again. You were looking for a technical break out of this descending level of resistance. You got a false break over that, but you didn't get the hour candle to open and close above that. It didn't hold it, right? So that was a false break, similar to what we've seen in the past right here. When it hit up at 65 bucks, it needs to hold that level, get trend continuation or consolidation over that level in order to get the continuation to push up to 63 bucks. That's what you're waiting on, right? So if it were to happen tomorrow, I think it's either going to happen tomorrow or on Thursday, just based on pure technical trend. No expectations, right? This is just based on technical trend. It's either going to break for the upside very hard, for the downside very hard. I'm more inclined to believe, just based on the bullishness of this huge consolidation period in this pennant formation, right, that it's going to break for the upside. But it could happen for the downside too, right? Either way is possible. I'm just more inclined to believe it's for the upside. So if it were to happen tomorrow, what you're looking for is a break over about 59 bucks, a hold over that. You want to hold over $59 for an hourly candle, since this is on a 1 hour candle setup, this overall technical trend. If it were to happen on Thursday, you'd be looking at about $58.20 or so. So those are the levels that you're watching for as it is right now. And then the next level of resistance is going to be that $63 level. From $63, $70 is going to be the next level of resistance. The reason that I come up with this is just based on the fact that you see touch points here in the past, right? This is where you see the most overall rejection. 1, 2, 3 times. It's tested that $70 level, got rejected. That'll be the next level of resistance. $77 all-time high being that next level. It's a pretty big gap up from there, right? It's a gap up from 63 to 70. Not a lot of price action. It's a gap to fill. 70 to 77, big gap to fill. 77 and up, you're looking at 100 bucks, and then 108 to 114. 108 to 114 being the next zone that I'm watching for in terms of where the price would actually start getting this sort of price action again, or some sort of volatility for the downside, some sort of rejection. That's what I'd watch for, right? Worst case scenario. I want to prepare you for everything. I'm not a BSer, right? I'm not here to float your boat. I'm here to tell you this is an investment. Investments don't just go up. They also go down, right? That's part of the process. Worst case scenario, what happens, right? We got to be ready for it. If you're an investor in AMC stock, what is the worst case scenario if this breaks down underneath this overall level? I've said it before. I'll say it again, right? I look at Fibonacci retracements. I look at previous trends to get an idea of where stocks can drop to. And if this does not break for the upside, it's likely going to pop down to somewhere between $45 and $51 if it breaks beneath this overall pennant formation. So that's something you need to be ready for, especially if you're playing any sort of call option with a short expiration. You need to watch for that. Lines and technical analysis are not bullshit. I see that all the time. It's nonsense. A lot of people make a lot of money literally just playing technical analysis, even on stocks like this. I guarantee it. I promise you. This is how there's a lot of people that predicted the moves that are happening right now. I'm telling you, this stuff is doable. It's learnable. It's freaking employable. You can do it. I promise you. So watch for that. It's something to watch for and something to consider when making your own financial decisions. Draw this up yourself. Come up with a game plan, right? Have that in the back of your mind. If you're buying stock and you're hodling stock, you've got nothing to worry about. That's a discount. That's a discount. You're sitting absolutely fine. Call options are a different ballgame here. You got to mitigate risk with call options because they do expire, right? They don't last an infinite amount of time. So that's kind of what I've got for technical analysis, and that's what I've got for this freaking video. So guys, I say it again, please do not worry about that surgery. It's a really small one, literally just a 1-inch incision right here. I should be in and out within freaking literally no time. And if we go to Pluto during the meantime, man, I'll be sitting there on my phone with some freaking local anesthesia, lidocaine, I think they called it, going, hell yeah, let's go, baby. Light tabs, light tabs, light tabs. So that's what I've got for you guys. Blah, blah, blah. Drop a like and subscribe. All of you, my friends. Catch you on the next one. Much love and peace.